Good afternoon. It is Wednesday, December 27th, 4:05 p.m. Markets just closed. A big day in the bond market, people. This yield curve continues to flatten, and I believe that this is really the story right here. There's no doubt about it. The other day, I think it was yesterday, I talked about a disappointing 2-year auction, okay? And the 2-year had its highest yield in 9 years. Today, they auctioned off 5-year notes. Once again, a disappointing demand. I continue to show you this yield curve right here, 1027. The spreads are getting tighter and tighter. Look at that spread, 1 to 30. It's basically 1 point. 2s to 30, 0.84. 5s to 30, 0.54. I mean, and if you look at that 5-year bond, 2.202. This is yesterday. Look at the spreads just between yesterday and today. The 2-year was 0.902. It's down to 0.843. The 5-year was 0.57. Now it's 0.544. The 10-year, well, that didn't move all that much. But these spreads are getting tighter and tighter and tighter. The one thing they did manage to do, though, I said that 10-year, that 2.52, that was the line in the sand, right? On the 22nd, it was 2.488, right? 2.47, 2.41. They knocked it back down to that 2.4. And right now, as I speak, I think it is 2.40. What I wanted to talk about, though, people, one of our listeners, he made a comment the other day that he's in gold. He's been in gold for a long time, and he's hoping to get gold back. He'd like to see gold down at 1,000 again. And I commented, and in a nutshell, I don't want to see $1,000 gold again. And I'm not sure why anybody would. Now, if you're looking to add to your position, you want to wait to 1,000 to jump in. I don't know. I don't know about that strategy, quite frankly. I'm looking at a chart here. And this is a 10-year chart of gold. Okay? And what I see here, from that top, 1900, you can draw a line. And it goes all the way down. And we butted heads against it. Right? And that's that breakout that I've been looking for and waiting for. And that's going to come in at around that 1340, 1360 zone. All right? That's why my key has been 1340 for the longest time, for quite a few years now. Okay? But what you also see, way back in 08, starting in 07, 08, you had that inverse head and shoulder pattern. It was very clear. You had the left shoulder, you had the head, you had the right shoulder, and then you had that breakout, okay, to the all-time highs. Now, what I've been seeing for a long time, quite a few years myself, is another perhaps inverted head and shoulder pattern playing out. You have that high, that left shoulder right there, 1900, came down to about the 1600 level 2 or 3 times, bounced up to that 1800 level. That's a possible shoulder. And then you have what we've been in this, what looks like could be a head forming, all right, which would take it up to about the 1800 level. And then we would need to complete a right shoulder. Now, am I playing fast and loose with this chart? Yeah, perhaps I am. Perhaps I am. But this has not been invalidated yet, okay? And I don't pretend to be a chartist, okay? But the similarities are certainly there. They're worth noting, all right? So a move down to 1,000 would negate, in my mind, this whole pattern. And we've been putting in higher lows since the bottom. I drew this upward sloping line, right, from 1050. And we've been putting in these higher lows. So a move back down to 1,000, in my mind, would do a tremendous amount of technical damage. That could take a very long time to recover from. I'm talking years. So what are you asking for? Take a look at that. So the last thing I want is $1,000 gold, okay? I want to see gold continue to go up. And on that note, gold, once again, up today, about $4.50. It has taken back all the moving averages. Today, 1292.20. It's above the 200-day moving average, which comes in at 1278. And that 200-day moving average is a gentle upward slope, which is very positive. It's above the 100-day moving average, which comes in at 1291, which is a gentle upward to flat slope. It's above the 20 and 50-day moving averages, 1266 and 1277 respectively, well above those. And those are kind of slightly down, but I think those could change very quickly. Okay, so it all looks pretty good for gold right now since that rate hike. And I had said I wanted to get that rate hike behind us in the worst way. And since we have, gold has reacted very positively. And now I want to get this calendar year behind us in the worst way, because I think gold could have a very big year. So just looking at the markets today, rather quiet day. The dollar, though, the dollar got spanked today. Spanked. It had a 92 handle at one point. So we have to watch the bond yields, and we have to watch the dollar. I don't want to get distracted with all the other, kabuki theater that's out there. All right? Dollar 93.04, down 25 cents at the time that I wrote this. The 10-year 2.4. They smacked that yield down. Okay, that's where they want to keep it, 2.4. All right, and they were able to take it back down again. And that's the paradoxal right now, because the 2s, the 5s are going up, yet they were able to keep that 10-year down. All right, so we have to watch this. Bitcoin, it's almost like you have to mention it now. Okay, 14,649. Somebody also asked me, what do I think Bitcoin's going to be a year from now? I have no idea. I have no idea. And anybody who says they know, watch your wallet, okay? Because they don't know. All right. The Dow was basically flat, up 7 points. S&P was flat. NASDAQ was flat, down 2 points. The Russell was flat. Very quiet day on Wall Street. Palladium was the big story today. 1,055, like at a 19-year high, something like that. I had said once before that's supposed to be the metal of the future. So we got to watch that. The VIX kind of went up again, rebounded, 10.72. It was up 4.59%. All right. The other thing I want to mention, though, I have an uneasy feeling when gold is up, and it was up all day, up nicely, and NUGT, which I talked about, I think, just yesterday, was down slightly today. So maybe there was some profit taking. All right. Wasn't down much. Closed the day down 20 cents at 31.64. Down 0.63%. So pretty much flat on the day. Nevertheless, I like to see the gold stocks go up when gold is going up, because sometimes the stocks could be signaling something. So we have to watch this. My enthusiasm is it's in check. It's reserved as far as gold goes, but I like what I'm seeing so far. So that's about it, people. Just going to wind down this year. There's one other thing I want to mention. I've been keeping track of these credit default swaps, and there's no alarms or anything like that going off. All right, you're not going to get that here. But I've been watching that Italian 5-year credit default swap. And since I started tracking it, it was 114.935. Kind of stayed the same. Up to 116.395, 116. Then it was 117 yesterday. And then today, 118. So it's gone from 114, almost 115, to now it's crossed 118. Does it mean anything? It's worth keeping track of. Others have stayed the same. Others have even gone down. Okay? So I'm not saying there's anything there just yet. All right? But I'm certainly going to continue to track it and try to figure out what's going on here in a little more detail, because I think it's important. Okay, I don't want to wake up one day and find out that the Italian banks are crashing and it's 2008 all over again, which could very well happen. Okay, because it's got to start somewhere. All right. So other than that, that's pretty much it. But again, I like what I'm seeing with gold. I do not want to see $1,000 gold. I already have all my gold and silver. I've had it since 1999, and I've accumulated. Okay, and the last time I bought silver was probably about maybe 4 years ago. I picked up some more silver, and the last time I bought gold was longer than that. Okay, maybe 8 or 9 years ago was the last time I bought any gold. Okay, so I don't need any more. So I'm not looking for a pullback. All right, those who got in at $1,000, they're doing well. All right. I remember a guy approached me. I might have told you this story. He was starting to find out about gold, and he figured he knew somehow. I think through the grapevine that I had purchased some gold. So he came to me. Okay, and I told him about my gold dealer, and I told him all this, blah, blah, blah. And at the time, I forget what it was. It was maybe might have been in the 500s or 600s. I'd have to go back and check. But he didn't want to buy it because he thought the commission was too high. I said to him, and at the time, the commission would have been the premium would have been maybe $25 an ounce. I said, in the scheme of things, $25 is not going to matter one way or the other. Okay? And he didn't buy. All right, and it went up to 1900. All right, he missed a huge move. Okay, so if somebody wants to add, I think now's a decent time to do it. I wouldn't suggest waiting for 1,000, because we might not see that again. So if you have more money to put to use before 2018, it might be a decent time. So just saying. Anyway, that's about it. Another gorgeous day out there today, people. Beautiful winter weather. Just cold, crisp. Went out for a walk earlier. Just very quiet this time of the year. If you can get out, certainly do. It'll really just renew your mind, spirit, soul, and body. And that's it. Lord willing, we pick it up tomorrow, and that's it. This year is winding down. But I think 2018 could finally be the year that these gold bulls, including myself, although I've been a bear for quite some time, finally get a little respite. So that's it. We pick it up tomorrow, Lord willing. Thanks, people. Ciao.